Good day, friends all across the globe. Today we'll be looking at Module 4, Financial Modeling and Reporting, still spreadsheet applications. By way of definition, financial modeling is the process of developing mathematical model or representation of a business finances. It involves forecasting and analyzing a company's financial performance using spreadsheets, many financial instruments, and quantitative methods. If, for instance, as an accountant, you want to prepare statement of comprehensive income according to IFRS, or you want to prepare profit or loss account, profit and loss account, according to generally accepted accounting principle, which is still applicable and relevant in the United States, you can customize these templates. You can customize these financial reports using spreadsheet or using Microsoft Excel. All you just need is to have a format of what you want to prepare. Then once you have this format, you already know, for example, that total asset is equal to total current asset plus total non-current asset. That will give you a total asset. And you also know that accounting equation says that asset must be equal to capital plus liabilities. Assets must be equal to capital plus liabilities. So what are the capital? What are the liabilities? Once you have all this in mind, then you can go and use the Excel template to design financial model. We also have financial model, like you want to use Excel to do bank reconciliation for you. We are going to see the format model in the practical session. Then also you want to design model maybe for salaries, for cash flow, for ratio analysis. These are areas you can design model. As soon as you now insert the relevant formulas, all you just need is to enter the data, and the formula inbuilt in the model will take care of the rest of this transaction. Now, the key takeaway when we say about financial model is that it has to do historical data analysis. You have data from the past performances and past record of the organization. You can key in those past data. I have said this over and over. Study the past if you want to survive the future. And in accounting, when we talk of predictive models, before you can predict the future, you need data about the past. So assumptions, of course, in model, you make reasonable assumptions. Very, very important when we come to modeling. Then forecasting, just like I mentioned earlier, that when you want to predict, you want to forecast, okay, from our historical data, from what we have gathered about the performance of the company when it comes to cash flow for the past 3 years. This is what we are forecasting, that in the next year, or in the next 3 years, this company is likely to have this or so figure as their cash flow. Then, of course, valuation, another important area of focus when it comes to modeling. Then sensitivity analysis. In sensitivity analysis, we say, what if the 100% we are expecting from our debtors is no longer 100%, those who owe us? What if it's 70%? Can we still be in business? What if it is 20%? So you need to alternate it. What if analysis? That's sensitivity analysis here. Uses for financial model is used in forecasting and business planning, cost estimating, valuation, investment analysis, acquisitions and mergers, project feasibility, mitigation of risk. Those are areas. Then who builds financial models? A question. Professionals in finance, financial consultants in banking, corporate financial professionals, consultants, professionals in real estate, accounting specialists, risk managers. See this subheading. How can you learn financial modeling? 1. Establish an understanding of finance and accounting. Learn MS Excel. Enroll in online courses. Consult books and materials. Participate in a devoted financial modeling course. And this one we are doing now. Employ financial modeling software. Aim for professional certification. Ladies and gentlemen, see what I've advised our clients in the past, that sometimes you find it very difficult for you to get one single accounting software that will meet all your needs. And what we do when we go to install accounting system for our clients, the areas the accounting software they desire cannot handle, we use Microsoft Excel through the instrumentality of financial modeling to back it up. As long as you can describe your expectation, this is the financial report I want, Excel can do all for you. I can assure you of this. Now we have how to build a financial model. Say define purpose. What do you want the model to solve? Is it final account? Is it income and expenditure? Is it sensitivity analysis? Is it to forecast? Is it cash flow? Just mention them. Then collect data. Set up Excel spreadsheet, input past data, make assumption section, create the income statement, create the balance sheet, model cash flow, conduct sensitivity analysis, and model tests. Those are the basic steps you need. Now, tips for creating a financial model. 1. Clearly explain the financial model's goal. What is the goal? Begin with a neatly organized structure with separate tabs for each component. We're going to see that when we come to practical demonstration, that's illustration now. Understand the organization and the sector to develop reasonable assumptions. For transparency, use consistent and unambiguous formulas. Create adaptability with input cells to facilitate scenario testing. To assure accuracy, include checks for errors and validation criteria. For transparency, document assumptions and methods. To simplify the model, avoid using circular references. Include sensitivity analysis to evaluate model robustness. Keep the model as simple as possible without sacrificing accuracy. Include visualization tools such as charts and graphs. And keep formatting consistent for reading. Then here, building financial models. To build financial models, evaluate the model's robustness under various scenarios. That's different scenario. You alternate. What if scenario? What if this one happen? What if I change this figure? For complex model, consider constructing a dashboard. That dashboard will go a long way to help you analyze different areas of the model. Seek input from co-workers or mentors to help you improve. No nation is an island of itself. You cannot see one single individual that knows all. Make consultation. Refresh the model with current data regularly to stay informed. Learn from industry best practices. See some examples of financial modeling, merger model. We have the leverage buyout model, initial public offering model, sum of the parts model, consolidation model. Here, once you have a picture of what you want to achieve, you can design model in these following areas. Then advanced charting and graphing. What we are saying here is, aside designing model that we address the situation, whether financial reporting or non-financial reporting, we still have charting and graphing. You can clearly represent the data that we have captured in Excel. For example, if I have, 5 departments, department A, B, C, D, and E, and I have their sales figure, I can decide to graph this result. We are going to see that when we come to the practical demonstration. How to create advanced charts and graphs in Excel. Charts, graphics, and images are excellent ways to visualize and convey data, and Excel does the same for us by generating charts automatically. You don't need to sweat. You're going to see how Excel can do this. advanced chart. A more complex chart than Excel's default one is referred to as an advanced chart. We're gonna see this. See here, the advanced charting and graphing. How to add charts and graphs in Excel. Step 1. First open the MS Excel and then write your data there in this sheet. Then select all your data. You will find different charts that are shown below. See them here. See what we mean to my right here. See here you have English, Math, French. Then you come and select out of these. You see it marked in blue here. Then column or bar chart. Select all the data, click on insert a column or bar chart. The first thing is for you to launch your Excel book, then type out your data, highlight it before you go and click on insert, then pick what you need. You observe that the column and bar chart in 2D and 3D forms. Here we are choosing the cluster column for our data representation. See it here? After having A, B, C, D, E, we have English, Math, Hindi. Can you see what bar chart has given here? So now we can see the cluster column chart with the table, pie or donut charts. These are all these, as you can see from the screen we have here. Then say step 1 for pie chart now. We call it pie or donut chart. Select all the data, go to the option insert, and then in the chart group, select pie or donut chart. That's another name for it. Then you will observe here the pie chart in 2D or 3D forms. See it here. After selecting this, see the pie chart here. Pie chart. We're here using 2D pie option that is shown below. Now we can see the pie chart with the table. Donut chart. See here. Line and area chart. Select all the data just as usual. Go to the option insert line or area chart. You will observe the line and area chart in 2D and 3D forms. See this one now. Step 3 here, we are using, see the line. The line chart now. Now we can see the line chart with the table. So very straightforward. We're going to see some of these when we come to the practical demonstration. Then area chart also, see the step for area chart. If we have to show the above mentioned data in an area chart, for that you need to follow step 1 and step 2 the same, and then you will just have to choose an area chart option. So it's a question of just selecting the option. Remember, one thing that is common to any of the chart or bar graph or pie chart or donut or line chart is that you must first launch your Excel, key in your data, then select or highlight all the chart before you now go insert and you pick the one relevant. See it here, select all the data, go to option maps, then insert. Here you just need to choose maps. Now we can see the map with the table. Very straightforward. We're going to do demonstration. Now we're going to practical before we come back to question. And we look at the practical session. I will start with the charts. So you just see what I'm going to do here. I have here departments, then department A, B, C, D. If you want to add E, let me make it up to E. Then the sales figure, here I can say 5 million. And see, you can insert what I've done here. I can insert here, insert a row. I want to put in dollars, everything in dollars. 5,000. Then department B made sales of $6 million. Department C, we have 5,700 dollars. Department D, this is $7,800,000. And department D, $2,300,000. Now, if this is all I want to do, just what, and I want to put it in a chart. See what I've done now? I've highlighted. All I will do, I will click on insert. When you click on insert, watch again. I highlighted. I click on insert. Immediately, I have all these charts, all these graphs, everything here. So which one do you want to pick? See pivot chart, insert surface, radar chart. They are different of them. But let me click on this. See what I have. As soon as I click, I have the option to select this or the pie chart or the bar. But let me go. See what I'm doing here. I just click on OK. Watch. The moment I click on OK, see what we have here. A, B, C, D, E. See series. They are all represented. Very straightforward. That is the kind of design and so on. You can now copy this, go and paste where you need it. The same thing you will follow. Because of time, we won't do the demonstration for everything. I can save this. Let me close this. Then we go next. I'll pick another one, financial modeling. See, in modeling, this is another example, financial modeling and reporting. Here, we have cash budget. See something here. All you just need, I've said earlier, just have a purpose in mind. I want to do a cash budget. That's the case here. Once you have the format, just type all of them out. Then you have your data. You've keyed in all the data. All I need here, in a cash budget, you have your receipts, you have the payment and disbursement. And of course, you have the total cash available. You have the total disbursement. Then if you have opening balances, you insert that at least for the first year. The other one may be automatic. Then you get your surplus deficit, then you have your closing balance. If I want to make do with the data already keyed in, all I just need here, see, I will add from here, I'm adding, I'll go to auto sum because of time. And once I have this auto sum, do you know I've done only for one? Can drag this here, automatic, without wasting time, instead of using is equal to sum open bracket. Automatic, you have the total for all this. Then I need the total disbursement. This is template. I'm going to show you what if aspect now. I go to total sum again. See, as I click on total sum arrive. You come here, drag this to the end. It gives you the total. Now, ladies and gentlemen, just watch something. What if the net salary is 9 million? You know what we have here is 10,350. I decide to change this to 9 million. Watch the effect. It does reduce the total disbursement. But let me return it to 10 million as well. The next thing you do here in this template for cash budget is for you to find out opening cash balances. Do we have opening cash balance? Let's say the opening cash balance is 500,000 in dollars. I've keyed in that one. Then I will now say surplus or deficit. Of course, if your total disbursement is over and above your total cash available, that's deficit. So how do we get either surplus or deficit here? And in this template, we're already giving here A minus B. So I'll say equal to what? This is our A, total cash available. I'll say minus our B. Enter. It means the surplus is $61,650,000 if we use the dollars. But here we have naira here. So it's 61,650,000 naira. 650,000 naira. So what will be the closing balance? In this scenario, what will be our closing balance? See something here. We have opening balance, which is 500,000. Then we now have surplus, which is 61,650. So closing balance become what? Closing balance becomes what you have in the opening plus what you have as a result of deducting all your excess, all your expenses from your total cash available. So see it now. Closing balance will be this auto sum, which is 62,150,000. And if, of course, you cannot take this and drag for all. But the closing balance in accounting, the closing balance for one period becomes the opening balance for another period. Let me show us again how to link. But before showing you how to link this, I can drag this closing balance. Deficit will always be this. See, deficit or surplus. That's how we get that. But then closing balance one period is the opening balance another period. We can come back here. Opening balance now becomes what? See something. I'll say equal to, this become the opening balance here now. Huh? This become the opening balance as per this template. That is one. Then let's see another one. This is another template, very, very important to accountants. This template is statement of financial position. This is a template for statement of financial position. Now, of course, we have all the data. Let me show us how you arrive at this. We don't want to make it automatic. How do you get this to become a template? See something here. We have Walmart LLC statement of financial position for the period ended at 1st December 2021. We have property, plant, and equipment. See it here. Then to make this in template, formulas need to be imputed. So how do you arrive at your total non-current assets? We have three items: property, plant, and equipment, intangible asset, investment property. You can use your auto sum, automatic, that's there. Then we have current asset. We just have two of them. Sum the two together, you have your total current asset. And what is total asset? Total asset equal to total non-current asset plus total current asset. So all I need here, say equal to, I pick this, then I'll pick, you click on this, press enter. It means total asset is $40 million. And remember, accounting equation says asset must be equal to capital plus liabilities. Or put in another way, ownership must be equal to ownership. What you own is equal to what you owe. See what you owe here. Loan, 8 million. Debenture, 7 million. These are non-current liabilities. So to get your total non-current liabilities here, I'll use auto sum. That's 15 million. See something? Then we have bank overdraft. These are our current liabilities. I will also sum that, auto sum. So we have the total current liabilities. What of total liabilities? Equal to your total non-current liabilities, press shift key, plus your total current liabilities, which is on cell I-26. Press enter. It means our total liability, which is the summation of total non-current liabilities and total current liability, is $20 million. Then we'll come to equity. And what is equity? Ordinary shares plus reserves. Here we have share capital 15 million and we have share premium of 15 million as well. So total equity, of course, will be the summation of those two items, which is 20 million. Then how do we now get total liabilities and equity to balance the accounting equation? We said accounting equation, as discovered by that Italian Luca Pacioli, asset must be equal to capital plus liability. And We already have it here that our total asset is 40 million. So let's see the total liabilities and equity. So this is equal to, we'll pick our total liabilities plus you pick your total equity. Enter. Can you see? Assets 40 million, liabilities and equity 40 million. Now see the different scenarios. What of if property and equipment is no longer $20 million? Let's say it's $34 million. Can you see that your total non-current asset has increased? Even total asset has increased. So it's no longer the same thing. And one of the ways you can handle that is, of course, you bring it to reserves. That's the difference. Depending on the reason, maybe the revalued assets. And when you revalue assets upward and there is a surplus, all we just need here is to come and create revaluation reserve, $9 million. And this thing we agree with the $49 million we have here. Now let's go straight now and take our questions. In this particular module, I'm just going to read out the question for you. I expect you to provide the answer if truly you have followed what we have been discussing. I will just read them out. I call them practice question. I'm not going to give us the answers here. It's part of your test and preparation for the certification course in spreadsheet application or digital accounting and finance challenge. What is the primary purpose of financial modeling? See the options here. A, to create artistic visualizations in spreadsheet, to develop a mathematical representation of a business financial performance, to analyze social media trends, to create invoices for customers. Which is your answer? Select. Now, which of the following is not a common use of financial modeling? See the option A, forecasting and business planning, investment analysis, image editing, mergers and acquisition analysis. Choose your answer. And 3, what is the first step in building a financial model? See, create an income statement, collect past financial data, define the purpose of the model, add charts and graphs. Then question 4 is why is sensitivity analysis important in financial modeling? A, it helps evaluate the model's performance under different scenarios. It removes unnecessary formulas from the spreadsheet. It prevents users from editing financial models. It automatically formats data in a model. Choose your answer. Which chart type is best for visualizing financial trends over time? Is it pie chart, line chart, histogram, donut chart? Ladies and gentlemen, thank you for your attention. If you need any further explanation or query, reach out to me.